satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Not feeling good today, folks. I feel that Phillies got cheated by that bozo from Houston that made that fabulous catch in the bottom of the ninth inning. My goodness, it looked like I was back at the Terre Haute Phillies organization in Terre Haute, Indiana, back in 1956. The closest I ever got to that, folks, was wiffle ball. Boy, that was really an exciting game, though. I really enjoyed it, even though it didn't go the way that I wanted, but it really did, because I have many friends in Houston and a whole lot of friends and family in Philadelphia, so it really didn't make any difference. But what a great game, 3-2, and we've got 2 more games to go, hopefully, and then we'll see who's going to win the World Series. Now, speaking of the World Series, folks, we're playing in the World Series today in the E-mini S&P 500. Now, I posted a chart here right before I was getting ready to do the show. What I try to do is to put a chart up that will describe the things that we teach here at our 24/7 and the mentoring that I do. But you'll notice here that we had an AB equals CD pattern just absolutely perfectly. Well, I saw this occurring, and what I did was I also saw that we had a 382 retracement of the high that we made on Wednesday, not the high that we made on Sunday, but the high that we made on Wednesday. Very important, because I want to show you what happened. After this occurred, boys and girls, the market broke down all the way down to the same level right here at 37.10. 37.10. I mean, it dropped 80 handles, and that's a lot. At that time, I was getting ready to introduce my new ABCD Addendum A, and that is, it's a new trading system that I just developed. We're selling it here for $3,500. Sarah just alerted me that it is no longer available. Okay, dear, well, nothing we can do about that. But from that level right there, we're going to follow through what really happened. Because guess what, boys and girls? We are going to have an ABCD Addendum B as our product to sell today, but this one is $4,500. And here's what you're going to do when you see this. This is really, really secret, so don't share it with anybody. Not many people have seen these ABCDs before, but this is what we're looking at. And there's where we were on the pullback. You'll see, here's where we were right there. We came right down here, then we went all the way up and all the way down. There was the ABCD I was looking at. There was the B leg. Here's the C leg, and there's the D leg. There's AB equals CD, and now we've come down making new lows on the day. Now, folks, this is where the petal meets the metal, and this is where the $4,500 course is going to, in fact, it's cheap. It's cheap. Sarah says we're halfway gone of sales for the day. We were shooting for 100 sales. We've already got 53 on this group, so that's really good. But now, anybody that can guess why that ABCD is important will get a 10% discount off of the ABCD B addendum course. The A course is already sold out at $3,500, but the B course at $4,500 still has 26 more people, and if you're lucky enough to get called in, you'll be able to get those wonderful systems by themselves. But if anybody, Johnny, put your hand down. Johnny is yelling and screaming. I see, Johnny. I see. Johnny is going to forward one of his charts to us, folks. He doesn't do this very often, but by golly, we're going to get this one up here so you folks can see it. It looks pretty good. Now, anybody that can guess what that little blue arrow is, can anybody guess what that little blue arrow is? Yes, Johnny, everybody's guessing. They see it, 0.382. Yes, I know they don't have to buy the ABCD Addendum A or the ABCD Addendum B. They don't have to do either one of those. They just got to do ABCD and pay close attention. The mistake that I made early this morning was I took the secondary high. This was after the Fed acted, remember? And there was the real high right there at 93.28. And folks, you got to get these numbers right because by golly, they're really accurate. And we went to exact within 1 point of that thing. We went 1 point higher, folks, of that 382. But Johnny says that still qualifies because it's less than 0.001%. And you're absolutely right, Johnny. And thank you for your chat. Now go back to eat your milk and cookies and let us get some work done here. So that's why that is so very, very important. There were other things happening that were going along. But if you like 382, and some of us do, oh, that makes me a poet. I don't know it. Here is another 382, and Johnny's got his hand up on this one. Johnny, put your hand down. And here is 382, and if you like to trade the NASDAQ, look what you got there. You got an ABCD exactly at the 382 of the high that was made the day before the day after the Fed. That was on Wednesday's high. So that is pretty much spot on. I hope that helps you guys. It don't work all the time, but by golly, when it does work, it really does work. Our guest today will be Jeff Huge of Alpha Insights. On Monday, we're going to have Norm Winsky. On Tuesday, it's an open day for election. And on Wednesday, we're going to have hopefully Shane Smolian. And on Thursday, we're going to have Tim Bost. And on Friday, I'll probably being in for some rest and relaxation because with these markets as active as they are, the old cowboy needs it. So anyway, if you have any questions, folks, it's 877-927-6648. But to see this kind of volatility today in the stock market is really quite amazing. Look at these moves we've had, folks. We just went down and touched the bottom here in the S&P again at 37.17, and we already rallied 20 handles. That was in a period of about 4 minutes. So these markets are definitely rocking and rolling for sure. But who knows where they're going to end up with 2.5 hours left to go in the trading day. Now, I wanted to talk to you about one other thing today, and we'll get back to this when we finish we have to pay a few bills here, but I want to go over the gold trade. I've had several people ask me about the gold trade, all constructive criticism, but I wanted to go through and show you what we were looking at because it was doing exactly what we thought it was going to do. But we'll get this up here, and then when we come back, we've got a break coming up here shortly, I believe. Want to double check to see when that is, and then I'll find out whether we can get you up here to we've got a whole minute left, so just give me a second here. I want to get it set up, so I won't be able to do it all, but I want to do part of it. The main thing I want you to see on this gold is that you'll notice here that, shut the front door and raise the rent. What's going on here? I lost the chart. Just a minute. Well, by the time it gets back, it's going to be crunch time. So let me get this gold chart up here again. Now, the reason why I'm showing this, folks, I show you, because I do, a considerable amount of trading. I do a couple trades a day. Anyway, we'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the hourly chart of the gold over the last 10 days, and I want to just go through the patterns that we were looking at. We had a beautiful, as you can see here, we had a beautiful A, B, C, D pattern right here at the top. We had a really great sale up there at 1685. We rode it all the way down to here where we went long, and then we had the A, B, C, D to the upside. We went short. Then we covered it all down here and went long right down in here. And here's where I screwed up. Right when it got to here, I said, well, that's probably going to be it. And it was gone from there. But, you know, you're not going to get all of these. The fear of losing money or the fear of leaving money on the table, you know, those are two of the greater fears. Great traders, they still, to this day, and when Mark Douglas interviewed these dudes here in my office, in his office in Chicago, in his office in Scottsdale, the same thing. That was the only really fear that a great trader has, is leaving money on the table. And the only way you cannot leave money on the table, and that is if you get the absolute low tick or you get the absolute high tick. Because if you don't, you're leaving money on the table. So get used to that. You know, that's it. The only reason I bring this to your attention today is we've had a tremendous run here in gold over the past several months because we've been so bearish, and the last few weeks have been really good. But the person that asked me about why did I get out so soon, I made a decision, and my decision was wrong. Do I worry about it? Heck no. I just go on to the next one. You know, I'm not perfect. Nobody is. But you know, when it doesn't work, you just shake it off and go to the other ball game. You know, that's it. There's always a doubleheader. There's always 7 games of the World Series. Well, not always. You got to split it. But anyway, that's why I wanted to bring this to your attention, because, you know, I go through this stuff all the time. Today, I can see a rally coming into that jobs report. The reason why, we were sitting there at 2 standard deviations on the low of the day, and the NASDAQ right before that report came out. And what happened? The NASDAQ rallied 250 handles all the way up to stop You know where, Johnny? Yes, that's right. Exactly at the 382. Where this market's going to close today will be very important, because if we close really strong, this was an important bottom today. But if we close weak, then we've got more to come to the downside. And that's why we've got some of our guests coming on that have been pretty good at telling us where these bottoms might be. And that is sometime in late November, usually right around the Thanksgiving time, or possibly even early December. And of course, we have the big election coming up on Tuesday that's going to be, what would you say, a coin toss-up. I frankly think it's going to be a lot closer than some people that wear red hats might think, but that's just my opinion. In my opinion, believe me, folks, it's not worth a lot. It's in two areas, folks. I know a little bit about short-term trading, okay? I know a little bit about raising kids. I did a pretty good job there. but picking real estate, well, the homes I've done okay in, but the other stuff, not so well. And the worst one of all is trying to pick a politician or back a politician, something like that. I have a really, really bad track record on that. So who knows? Anyway, I'll tell that story, but I'll save that for a later day. Okay, now, one of the reasons that the market is having these gyrations is the fact that the U.S. dollar is fluctuating in a real high area here. And the central banks, I believe, are trying to put some controls on the U.S. dollar. That's the way it looks, because every time it gets up near that 112.30 level, it sells off quite a bit. And that's exactly what happened today. And that's also what helped precipitate the rally in the stocks, because once these things start to move, they all move together. But after it's over, they settle down. Treasury bonds, they move $1,000. You blink your eyes, they're down $1,000. So there's people that are hammering this market on both sides. So you've got to be very, very careful. Remember, we've been in a long-term bear market in bonds, and this is not over. When we do get a rally in bonds and notes, which could come at any time, that's what it's going to be. It's going to be a rally, and it'll probably be a 382 off of a major high. But by golly, right now it's not. It's still hovering down near the lows, and we could easily make new lows. We're less than a point away in Treasury bonds of making new lows, and that's not a good sign. Remember, I posted that 2-year yield curve the other day and showing you that the 2-year versus the 10-year, that it was still going straight up, and that's a sign of of a recession coming. At least it has been, over the past 6 recessions, I believe, if I'm not mistaken. That was a number that I heard. But one of my favorite quotes is, the stock market actually predicted the last 6 recessions out of the 12 recessions that we had, or something ridiculous, a statement like that. And basically what that means is that they were right more than half the time. So that's the main thing. Folks, it's not about being right or wrong. It's about how much you lose when you're wrong. That's what you got to do. If you remember that quote I told you about, Paul Tudor Jones, it's my favorite, from the Wall Street Journal, 1986. And he said that the reporter said to him, boy, it must be great to be Paul Tudor Jones to pick the bottom in the bond market. And Paul Tudor Jones said to him, well, you're only partially right. And he said, what do you mean? He said, the quote should be, yes, it's great to be Paul Tudor Jones to pick the bond market bottom to the exact tick before a huge rally, right before he missed it the last 6 times in a row. So he was wrong 6 times in a row before he finally got it right. And of course, he's accolated because he got it right. But you know what? He should be accolated for the 5 losses that he took in a row, because he was wrong on all those, and he just got out of the way. That's what you've got to do. The biggest problem that people have is they get married to a trade, and they won't give up on it, especially if you've had a huge profit in it and you've given it all back. Boy, they have a difficult time saying uncle. And that's the quandary that I have today. I mean, we're short with how many people have a 200 handle lead since Sunday night? And yet that's where we're standing here. And yet I'm said, do I take a profit here and miss the rest of it to the downside, or do I guess that it's going to rally today? I don't know what that answer is. So as I set through this today, I will watch it closely. The way it's acting with 2.5 hours to go, we're closer to the low than the high. We haven't made, in the last hour, we haven't made a 382 retracement. So those are the factors that I'm looking at. when I'm watching this. Those of you that have been with me a long time, going back to 2016 when we had Brexit, if you remember, we nailed that Brexit high on that day, 144, within 5 pips we got filled, and it broke 19 points, folks, and that was a lot of money. That was over 10 grand. In a matter of about I think it was 8 or 9 hours, if I'm not mistaken, and that was a big move. And so I said, "Yep, we're gonna book it." Well, here again, Mother Nature said, "Look, this is the wrong thing to do," and the reason why is it went down another 10 handles, which was another $7,000 to the downside for it finally bottomed. And then had a relatively good rally. So when you get out of a trade, just forget it. You just can't. You can't second guess yourself. If you do, you're going to go nuts, and you don't want to go nuts. Nuts is a place where you don't want to live. You want to have a lot of fun at this. You're going to win some, lose some, but just because you didn't get the high tick or the low tick, shake that off. That doesn't make any difference. Hey, we're going to stay tuned for Jeff Hughes, Alpha Insights. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade.
Hey, Al,
sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. Our guest today is Jeff Hughes of Alpha Insight. Jeff, we have a question to start off with. The gentleman asked, do these intraday fluctuations of 700 and 1,000 points, do you take those into your database when you see them?
Yeah, absolutely, Larry. And thanks for having me on the show today. You know, the volatility of the market has definitely kicked up a notch or two. And, you know, the one thing I think market watchers need to be cognizant of is that, 1,000 points ain't what it used to be, right? The percentage change is really what we need to focus on. And so, we've seen 1-2% moves. I think a 2% move in any given day is, a pretty significant move. 1% has become more common in, recent years. And, usually inside of 1% is what one can expect in any given day.
Mm-hmm. Okay, your first chart is what the Fed is going to do next. And boy, I think you've got everybody's attention on this one. So what are you looking at?
Well, we're just using the 2-year Treasury yield, and that's what we have a chart of going back to 1980. And, the Fed's funds rate has pretty much followed the 2-year Treasury yield to a T. The 2-year leads the Fed funds. So the Fed's really just a trend follower. We've shown this chart before, I think a couple months ago, when it was breaking out above 3%. And we said, well, look, there's resistance at 3 3/4. But if we get through there, the next stop is 5%. And sure enough, if you take a look at the insert on the left side of the chart, there's a red circle right at 5%. And guess what? That's the dot plot where the Fed is now hovering around. Most Fed governors are now suggesting in their dots that they see 5% throughout the year next year, 2023. We're at 471 when I printed this chart out at the end of yesterday. And, I think it's pretty much a lock. We're going to go to 5%. That's the next stop on the train route here. And if we break through 5, then it's 6%.
Yeah. I can remember when I was trading bonds back in 76, they were trading at 56. So the yielding was 13% on bonds because inflation was 13%. The next chart we're looking at here is a long-term trend following model. It's still bearish, and it certainly looks bearish from this chart. What can you tell the folks about this chart, Jeff?
Well, you wouldn't believe the number of emails I get, from people just saying, hey, Jeff, what's it going to take to turn you bullish? People want to get bullish. And I'll turn bullish when the trend following model turns bullish. As you can see, just looking back over the last 5 years, this has been a pretty good guide to keep you in the market when it's going up and get you out into T-bills when it's going down. And the returns of this model in and of itself, trounce the S&P as a buy and hold investment. So, we've already challenged the upper boundary of that model, that long-term structural trend line in red, and broken above it twice. But we haven't seen confirmation from the short-term model line. And so when the short-term model line closes above that thick red structural trend line, then we'll know it's time to get long the stock market. But at this point, it just doesn't make sense. Stay in T-bills, collect your 4%, just keep rolling them until it's time.
Yeah, that sounds like pretty good. Now, the next one is really interesting because it has to do with Elliott wave, and you've got two different waves of looking at this, which is good because I think it gives a little bit of everything to some of the people. So what are you looking here as far as your short-term Elliott wave counts?
Yeah, this is just a 3-month look back to that August 16th high, which we marked as primary wave 2. And so we've been kind of following the ebb and the flow of the market since that time. And there's really two options. And the market always has options, as you know, Larry. But, we have a preference for option number 1, and we've counted down primary wave 1 down, intermediate wave 1 down of primary wave 3 down, and that terminated on October 13th. And since that time, we've been in a counter trend advance, which I believe terminated on Monday, on Tuesday, which was the 1st of November. And since that time, we've been in a volatile decline. And I think if we make a slight lower low, that will confirm 5 waves down and suggest that we're on our way south, probably into election day, which could mark the next cycle turn. If we look at option number 2, the other way to think about this is maybe that November 1st high was just an A wave, and this pullback has been wave B, and maybe we'll get a big rally into the election. One way or another, the market's going to tell us, but at this point, I think the odds favor option number 1. And so, with that, there's always a little doubt, but when in doubt, zoom out. And that's really what I'm trying to tell you in my next slide.
That's the number one thing on this painting behind me here in the office. Says, "When in doubt, stay out," and that's absolutely true. So the next one we're going to be looking at is, oh dear, this is one that looks a little ominous. If you're really bullish, you might want to pay attention to this one because, what happened to my? Just a second here, Jeff. I'm running into a slight problem here, but I'll get it taken care of. There we go. We're ready to go now. I had the wrong thing to put in here, and there's where we are. Boy, that does look bearish. My goodness, especially that one on the left. Holy cow.
Yeah, they're both bearish. They're just two different time frames. This is the S&P 500 over the last 3 years on the left and over the last 13 years on the right. And so if we just kind of think about where we just looked at those very short-term options, and we kind of zoom out 3 years and see where that puts us within this bigger picture, you can see that June low was primary wave 1 down, and the August high was primary wave 2 up, which puts us in the midst of primary wave 3 down. And if we've traced out a 1 and a 2, the next move to the downside is wave 3 down, and that could carry all the way down into this 2400 range before primary wave 3 down is complete. And if you look at the chart on the right, it gives you even further context. Looking back 13 years to the March 2009 lows, we could see there's a 5-wave pattern to the upside that topped at cycle degree, possibly super cycle degree. And so we're approaching this from that perspective, that this is potentially a super cycle degree correction. It will be an A, B, C, 5 waves down, followed by 3 waves up, followed by another 5 waves down. We're really just in the early stages of cycle wave A down. And so that 1, 2, 3, we'll see a 4 that follows and a final plunge in 5, which could carry us all the way to, say, S&P 2250 before wave A terminates. That should be followed by a pretty healthy counter trend advance, which could retrace, say, 50% of the decline before it terminates. But once it's done, there'll be one final wave to the downside, which should be a very, very powerful wave that could carry the S&P all the way down into, the 1,400 to 1,000 range. We've got a variety of ways of projecting it, but I don't want to put the cart before the horse, right? Let's focus on wave 3 down for now, and that's where I think we are.
Okay, one of our listeners just asked a question or typed in a question. He has someone that he's watching that does Elliott Wave, and they are looking at this situation that we have now as extremely bullish. Now, I don't know where they get that interpretation from, but can you see a bullish interpretation of where we are right now, Jeff?
Well, I really can't. And, if in fact we do have a make or break, right? We could be wrong if the market takes out the August 16th high. That would suggest that something other than what we've traced out here is happening, but it doesn't necessarily mean it's bullish.
Okay, listen, we'll take a break and we'll be right back with Jeff Huge of Alpha Insight. Great work, Jeff. We'll be right back with you, okay?
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, it looked like Jeff has a stock from Wisconsin for us. Is that correct, John? A Badger stock?
Yeah, Larry, this is Badger Meter. They're the company that provides those meters to all your water utilities so that the water meter reader doesn't have to come into your house and go down in the basement and check the water meter every month. They just drive by now with an infrared scanner, and they point it at your house, and it picks up the reading. And these guys are coining money. In fact, we bought the stock 2 weeks ago as it was breaking out of that minor base there, and it proceeded to break out of this major base. And I wanted to present it today because, they reported a great quarter. The stocks had basically a vertical move over the last 3 weeks, and it's just pulling back a little bit here into what I would define as trading support around the 13-day exponential moving average. And I think it'll hold that level. I think it's viable here for a pretty big upside move to around 145. This is a name that we presented to our Alpha Insights Idea Generator Lab subscribers. This is a service that we provide for institutions and individuals who want stock ideas. And even though we're bearish on the stock market, Larry, there's always opportunities. And we focus on those that are leading the market in terms of relative strength and making new all-time highs. And that guides us in the right direction. We've had pretty good luck with our stock picking over the last few years.
Well, that makes good sense. J.P. Morgan said it's a market of stocks, not a stock market.
Yes.
Now, your portfolio performance is updated there, and you should be very proud of that, Jeff. Tell the folks what they're looking at here.
This is the past year's performance, 40 ideas that we presented to subscribers of this Alpha Insights Idea Generator Lab service. And, it's up about 25% versus the market down about 19%. About a third of our picks are wins, about 2/3 are losers, but our losers only lose about 5-6% on average, and our winners make 15 to 20%, about 16% over the last year because it's been a bear market. But in a bull market, we tend to average closer to 20%, and our win ratio tends to be closer to 50%. So this is just a tough bear market environment, but the key has always been just to kind of avoid the losers, and so we sell our losers as soon as it looks like they're missing the mark.
Okay, now the next thing is you have this free newsletter that I think the folks would be interested in because it's got a lot of good ideas and information in it. You want to tell the folks how they can get that?
Absolutely. You can always go to my website, jwhinvestment.com, and we've got a tab on the menu bar that says free newsletter. You can check that out, and it'll take you right to the newsletter. You'll see something like this that pops up. It gives you an opportunity to subscribe for free. You just type in your email and press subscribe now. It'll be delivered to your inbox every month, usually the first Saturday of the month. In fact, we're publishing our November issue tomorrow at noon. And, I would encourage you to sign up today so that you don't miss out, that you get it. There's an option on there to become a member. We get a lot of emails from subscribers to the free newsletter saying, hey, we really like your big picture ideas, but how do we implement them? Give us some ideas, right? And so if you become a member for $10 a month, you automatically become a subscriber to our Alpha Insights idea generator lab service that I just described to you. And we send you our top actionable trade idea every Wednesday between noon and 1 p.m. Central Time. Give you plenty of time to implement it that day. And, it's kind of a neat little service. If you're looking for idea flow, we provide a solid, steady flow of top ideas, one every week. And you get it for less than a cup of coffee costs at Starbucks these days.
Well, that's $12, isn't it? No, I'm not a coffee drinker, so I don't really know. Hey, listen, thanks for being our guest today. We'll have you on again in a couple of weeks. And anytime you want to come on with something special, please let me know, because we love to hear what you have to say. And keep up the great work, Jeff. It's just really superb material.
Thanks, Larry. I might take you up on that. Take care now.
Please do. Jeff Huge, folks, Alpha Insight. He's really got a great program, and it's working nicely in both up and down markets. And, of course, he's been bearish, so that makes it pretty easy. Now, what we're going to do now, we've got just a few minutes left to go. I want to review where we are now. We're near the lower of the day in the S&P and also about 100 points away in the Dow Jones Industrial Average, and the NASDAQ is backing off again. But the fact that those markets went up today and hit those 382 levels that I posted here today, exactly, folks, and the NASDAQ exactly in the S&P, and the S&P was just spat on 382, but the Dow Jones Industrial Average, it went all the way up to the 61% retracement, folks. It had a $900 rally today. It went from 11.7 to 32.6. And let's try that again, Larry. That is 900 points, and by golly, that's what it did. And it's 900 up, and now we're 600 down. So we had a 1,500-point swing in the Dow Jones Industrial Average. So if you're looking for some place to put your money on, red or black, pick the stock market, folks, because it's rocking and rolling. You might as well pick one of those numbers and see what it's going in. Johnny's raising his hand back there, and he wants to pick number 382. Johnny, there is no 382 on the roulette wheel. They only go to 36, Baba. Anyway, he's going to have to find another game. Maybe they have 382. No, 382 is not even on the Keno board or on bingo. Well, I'll get you started with bingo, Johnny, and you can go from there. Folks, I learned how to count on a bingo board with my grandmother. And when I got finished with that, she taught me the 52 cards in the deck, how they related to religion, with the 4 apostles and all that stuff. I mean, it was really incredible. And I still remember all that stuff. But I remember the counting in the cards. Whenever she put the cards down, I had to be able to quickly do it. Otherwise, I'd get a little tap on my wrist with that little wooden hammer that she had. Didn't hurt very much, but it was a way of saying I was wrong. But that's how I learned those numbers. And by golly, it came through all these years. I still remember 3 of them. Let's see, 3 and 5 is 13. No, 3 and 5 is 8, and 8 and 5 is 13. That's how it works. Okay. Anyway, we'll get some of these numbers back together here. Remember, folks, to close today, if we close really strong and the market reverses these last 2 hours, we got a chance to be bullish for another few weeks. But if we close really badly today, and badly today is if we close below 3680 in the S&P 500, that would be a very bad close. After reaching a high that we had on Sunday at 39.28, that would be down well over 200 handles in 5 trading days, and that is not very bullish. The Treasury bonds are still acting bullish. They're trading at 119.11. The low's been 116.70, so it's 2 points away from that. The Treasury notes are doing the same thing. I think there's a big rally coming in there, but it hasn't started yet. And with the Fed out there doing what they're doing with the interest rates and making the short-term rates get up to 5%, the 2-year, boy, that's a big move, boy. You stop and think where it was just about 7 months ago. That thing was trading at 0.75, folks. And look where it is now. I remember they were telling us it was going to be negative at one time. Wonder what those dudes are doing now. Oh, I know what they are. They're running for office. You'll see them on the ballot on Tuesday. Say hello to them for me. Anyway, let's take a little break here, and then we'll get back, and I'll wrap it up one more time of the things that we're watching and some of the moves that might be coming. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted a chart of the natural gas over the last 10 days, and as you can see here, we've made the three higher bottoms. That's a 1-3-5 pattern, where 1 and 3 are related to 3 and 5 all together, 618, 618. The time difference between 1 and 3 and 3 and 5 are equal. So that, and you can see we've had a big move today in the natural gas. So we believe that we're making a good turn in natural gas. And once we get above 6.50, which will be a breakout point of this move, then you'll start to see an acceleration. We want to watch for pullbacks where we can find an ABCD to potentially get long on natural gas. Because this is the season where natural gas shines or doesn't shine, whatever it does. It certainly gives energy, but there's going to be some cold weather in certain parts of the world and other areas not so much. I don't think this is good. This is my opinion again, and like I said, I know as much about the weather as I do about baking a souffle, which I don't know anything about that. So I'm just giving an opinion of what I think it's going to happen, because everybody's one way. They think this is going to be the harshest winter ever, and I'm not so sure. But remember, I'm a cynic. I'm a little skeptical of anything that I hear. So keep that in your mind about where we're standing here with natural gas. I wouldn't buy it on a breakout, but I'll certainly be looking for an ABCD to get long here. And we haven't had one. We've just had straight down moves with basic corrections without ABCD, and that makes it a little difficult. So those are just some of the things that we're paying attention to. We're sitting near the low of the day now in the S&P, and also, well, the Dow's up about 100 off the low. The NASDAQ is near the low. So all of them are following along the way they should be. So what I'd like for you to do is to live every day in an attitude of gratitude, and may God bless. And please try to do something nice for your neighbors, because the folks out there are having a great deal of trouble. Maybe it's just to drive them to the voting booth, whatever you have to do. I've got to do 3 or 4 of those on Tuesday, but we'll see you on the flip side on Monday. Our guest will be Norm Winsky, Astro Trends.